On this show, we're going to go through some live mortgage rates and then we're going to do a deep dive into FHA one time close loans. Uh, we will go ahead and wait just a few minutes here, though, to get started and give everybody a chance to jump on and give us a chance to go live on all the different platforms here. We did put the chat up on the screen, so as everybody tunes in, feel free to drop a comment there in the chat. We'll get started momentarily. Great topic here to go through today after we get into some live mortgage rates. So just hang tight with us. We'll get started here shortly. I see some comments already coming in. Thank you very much. We'll get started in just a moment. All right. Thank you for the comments. They're coming in. And it looks like we are live on all the different platforms, so we can go ahead and get started. As we go through here, feel free to keep dropping comments there as you tune in, and then feel free to drop any questions you have as well in the comments as we go through our presentation. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every weekday on this show at 11 a.m. Eastern is go through some live mortgage rates, and then we do a deep dive into a different topic. Today's topic is going to be FHA one-time close loan. So our sales manager, Jose Gonzalez, with 28 years of experience, is going to do a breakdown deep dive into FHA one-time close loans. But before we do that, we'll do what we do every morning, which is pull up our pricing tool and look at some live mortgage rates. So Nick, if you're ready, let's go ahead and pull up that pricing tool and see what the market is looking like this morning. All right, let's check it out here. All right, so this is our tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is October 2nd, just after 11 a.m. So we should have live rates for almost all of our programs here on the tool. If you'd like a full breakdown of all the fees that go into the APR, a full itemized loan estimate, please get with one of our team members. We have over 400 licensed loan officers in 24 states for primary and second homes, and we can do our DSCR loans we love to do in 44 states. For our demo today, we'll set up the same scenario as always. We'll set up a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. Set the desired price to 99. That means we'll ask the computer to find the best rate at one discount point in cost. And we'll compare our programs, conforming conventional first. Then we'll check out our FHA regular programs. Later today, Jose will get into the one-time close version of those. And then we'll also check out our expanded guidelines, also known as non-QM, where we have over 5,000 additional loan programs beyond the standard. We also have VA. That's only for eligible vets and active service members. If you are eligible, let us know. We can quote it in a couple clicks. And we can also quote USDA in a few clicks if you are shopping in a USDA eligible area. Just let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score of 760 and an estimated debt-to-income ratio of 40%. So with these settings, let's see what the conventional rates are doing this morning. All right. So the best option here at the top for this scenario, 6.99 rate, 2.5 discount points and cost, final APR of 7.203. Now, if our customer doesn't qualify for conventional for any reason, we want to go ahead and check out an FHA option. So we'll keep everything exactly the same here, and we'll check out the FHA rates this morning. All right, looks like the best option here, 7.25 rate, 2.221 discount points and cost for a final APR of 6.884. So in this case, our FHA is a little bit cheaper than our conventional. Now, if for any reason our customer doesn't qualify for either, that's where we love to specialize here. At the Mortgage Calculator, we have over 5,000 additional loan programs that can help our borrowers with alternative income. So we'll switch to expanded guidelines, also known as non-QM, and we'll notice a new option pop up for income verification. So full doc is what we use for conventional and non-QM. So we'll typically use a non-QM option to take advantage of one of these other options, such as asset related, business bank statement. Personal bank statement 12 month is the most popular program. We have RSU, stated, VOE, 1099, P&L, no income CDFI, every option available. So the most popular is our 12-month personal bank statement, and that's for our self-employed borrowers. Many times when they submit 2 years of tax returns, they may have various write-offs and either may not qualify at all or may not quite get as much income as they need to purchase the home. So in this case, we will use no tax returns at all, use just their last 12 bank statements to determine a debt-to-income ratio of 40% using just their cash in the bank. Now, let's check out our our personal bank statement options. All right, looks like the one at the top here, 7.5 rate, 2.875 discount points in cost, and a final APR of 7.629. So right there with conventional at the moment for one of our bank statement options. Some of these other options here, notice there's dozens of different options. A little bit higher rates and costs may allow things like bankruptcies and foreclosures, and allow us to get around other guidelines besides just the income. So these are great programs. Please get with our team. They'll find the best bank statement option. And for our final two demos, we always want to do some live pricing for investment properties. So we'll pull up our pricing tool here. Again, 80 LTV, 20% down payment, and we'll compare our investment property options. First, we'll check out conforming conventional, and then we'll check out our non-QM expanded guideline options. So we'll start with conforming conventional. Everything else will stay exactly the same as our other demos. The only thing we've changed here is the occupancy. So let's check out what the conventional programs have added for investments. This actually isn't conventional, so let's not look at that one. We'll look at this guy here, 7.875 rate, 3 discount points in cost, pretty hefty cost there, for a final APR of 8.108. So investment properties, a little bit over 8 still for the last couple weeks. And most of our investors would ask for other options. So notice 3 discount points is $12,000 in this demo. Most of our investors would ask for a different option. Unfortunately, conventional doesn't have any higher rate options at lower cost, really. So we would love to present our non-QM options for any of our investors out there to compare. So we'll set up the same scenario, 80 LTV, investment property, and this time we'll choose expanded guidelines, also known as non-QM. And our most popular income option by far for non-QM investment is going to be our DSCR option because it doesn't require any income or employment from the borrower. Simply use the estimated rental income from the property to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage, the expenses of the mortgage, aka the property cash flows monthly, that's a ratio of 1.0 or higher. We also have ratios or options for ratios under 1.0 where the property doesn't cash flow. For the demos today, we always put 1.5, which is the highest value the system uses, so we can see all the best options. And we always need to choose a prepayment. 3 years is standard for these programs. We could choose 0, that will limit the amount of loan programs that show up and cost more. We could also choose 5 years, again, that will limit the amount of loan programs. They don't allow that, but it does save money when we do find one that does. For the most common options, we always choose 3 years. So let's check out the DSCR options today. I don't know if that's the right one there. I think for some reason someone put their DSCR wrong. We'll go with this one. DSCR 7.875 rate, 475 discount points of cost. Puts the final APR 7.991. So we're beating conventional again with our DSCR. Definitely recommend. There's actually 2 or 3 options here that beat conventional on a DSCR. Definitely recommend all our investors out there take advantage of DSCR. Even when DSCR is more expensive, usually 90% or so of investors take advantage of the DSCR when compared to conventional. So definitely recommend to check out these options. Some of these more expensive options at higher rates and costs may allow bankruptcies and foreclosures. And another popular request we have for these DSCR options is to use short-term rental income, which some of these programs at a little bit higher rates and costs may allow. So please get with our team to find the best ones. All right. Now let me switch my screen. And we'll get into Jose's topic for today. FHA one-time close loans are back. So now that the markets have, I guess, not necessarily stabilized, but I would say probably peaked, some of our outlets have allowed FHA to again work on the one-time close basis. So we talked about a few of these last week, Jose, for I think VA, USDA, and conventional. And actually, just last week, this program just got relaunched. So we do have options now, as of last week, for FHA one-time close is back in action. So these one-time close, remember, they're buying empty land, building an entire house from scratch, and then once it's done, it's all the same loan. It's a one-time close for the loan to purchase land, build the whole house, and you still have a 30-year fixed conventional or FHA or VA or USDA loan after all the construction is done. So these are not renovations, right? These are complete buy land, empty, build brand new house builds. So very unique. It is hard for the banks, investors, the end basically developers of these programs to anticipate the market when the markets are volatile. So unfortunately, they had suspended these programs for a while, and now they're back as the markets are hopefully correcting themselves in a more predictable fashion. So hopefully that's a good intro for you there, Jose. If you're ready, let's go ahead and check out your examples.
Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. To expand a little bit, yes, these one-time close loans are definitely not renovation loans, right? Renovation loans allow you to renovate an already built property. You cannot demo the property down all the way to the foundation and build a whole new property with the renovation loans, but you can. Basically, that's the purpose of the one-time close loan, is to build a new home. Now, this loan does allow you to purchase the land and build the home with one loan. However, with that being said, you can't just embark on that mission on a whim and expect to be able to close on this loan, because this loan will require you to have certain items already set, right? You do need to have a home already figured out. You need to have plans already approved. You can't start on this loan mission without any approved plans, because just getting plans approved from scratch could take at least 6 months from any municipality, 6 to 12 months to get any, and that's on a good scenario, right? If we have any delays in the processing of the plans by the municipality, you could easily be looking at 12 to 18 months. So you cannot really apply for this loan and expect to close on this loan unless you've already done some of your upfront legwork with the contractor, already have a contractor in place for your project, and already have some plans already drawn up and approved. Now, in some scenarios, contractors do have pre-approved plans that they can offer you. Sometimes contractors even have the land already available for you to purchase, on which that plan is already approved. You would just be the one soliciting the financing for the project. So you do have some economies of scale there with the contractors if you want to go with like a semi-custom type home, right? But that is very important to note, that you do have to have your logistics in place, because just like the renovation loan, this project is going to approve the build as one component, will approve the contractor as another component, and will approve the borrower. Because in essence, here, the borrower is going to be a credit and income approval. The build is going to be your property approval, and then you have the approval of the contractor, their track record, their insurance or references. They really don't want a novice contractor who just got into the business to be involved and in charge of your construction loan. So, really important to note what has to be in place before you go start shopping for a loan for a construction loan. Uh, so let's share some of the examples we have now. FHA obviously is primary residences only. Now, one of the reasons why this type of program was put on hold and is now back in action has to do with the volatility of the rates. Right? In this program, in essence, you are basically getting a 12-month lock. Right? They are extending you this program, and they're guaranteeing that it's going to be available for you 12 months down the road, which is quite a risk. So, in periods of too much volatility, you could see why these programs would be put on hold. So, in this case, right now, the maximum construction term we have is 12 months. More reason to note that you have to have everything in order before embarking on this project. So in this scenario here, you will note now that the rates are a little bit higher than your standard FHA rates, and the reason is because you're looking at a 12-month period that they're holding this loan for you. So 9.625 is your lowest cost option, and you can buy that down on this 12-month construction term. You can buy it down to 9%, and this is for a 1-unit property. And then our 9-month construction term, you'll see that the rate does drop by 0.25%. So you're looking at 9.375 lowest cost option and 8.75 lowest rate option. Now, our 6-month term, this is pretty aggressive construction term here, building a complete home in 6 months. So you really got to be ready for this one.
That would need to be like a modular home, or one that has the full plans where they've already built, 100, and the developer, has built and he's ready to go, right?
Absolutely. And they're not going to have any type of materials, delays, anything like that, right? This one is just going to be a slam dunk to build a home in 6 months. You're looking at 9.125 as your lowest rate option, lowest cost option. 9.125 lowest cost option, 8.5 lowest rate option. So last example, just wanted to give you a 4-unit quote just to let you know that the rates do not change, nor does the program change for a 2 to 4 unit property. And I wanted to touch on that a little bit here, just to let you know, FHA basically does allow 1 to 4 unit properties under this program, does allow manufactured home, and does allow modular homes. What is not eligible, I guess it's easier to put, log homes, bamboo homes, metal homes, container homes, those are pretty popular now, and post frame homes, like a barn dominium would be an example of a post frame home, and those are not eligible for this program. So our 1 to 4 unit for our house hackers out there is eligible under this program. Same exact rate. So all the rates are going to be the same for a 12-month term, 9-month term, or 6-month term. For a 2 to 4 unit, the same as a 1-unit property. So 9.625 lowest cost option and 9% lowest rate option for our 12-month term. The 9 and the 6 will have the same terms. And this program is for purchases only, no refis.
And all those things you were mentioning on the type of property, it's not just for the 4-unit. That's for all of them, all of the versions of the program.
Correct.
Yes.
Correct.
Cool.
All right. I don't see any questions about the programs. I do see a question, where are you guys located in Broward, Miami-Dade? Our office is in Miami, downtown Miami, but we're licensed in 24 states for primary and secondary homes. And then we have the ability to do our DSCR loans, our business purpose loans, which we're such a fan of, in 44 states. But yes, our office is located in downtown Miami. All right. Well, thank you everybody for tuning in. We do this show 11 a.m. Eastern every single weekday, where we go through the live rates and then do a deep dive into a different topic. So we'll be right back here tomorrow with a new topic to go through. Thank you for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.
Thank you, everybody. Have a great day.